After a client runs a payroll, it's obviously crucial for that client to know exactly the money that is required to be in the bank account to cover payroll and taxes and fees. I'm going to walk you through Old Florida's common management reports that give the answers specifically to that question. After a payroll is run, almost all of our clients with a working email address will have management reports emailed to them, and the most important of them all is the report that I'm showing you here, the payroll liability report. I'm going to zoom in a little bit and speak to specifically how to read this report and let you know what these numbers mean. The most important figure on the entire report is bank deposit. In this case, 17,315.13. In this test example, that's exactly the amount of money required to be in the business bank account to cover payroll. Okay, that bank deposit for all customers is always the sum of three different pieces. Okay, always. And I want to break those down to you very, very briefly. The first of the three is invoice amount, in this case $49. Very simple, straightforward. Most of the time that is drafted on check date, occasionally the day before check date, but that's the first of the three pieces. The second of the three is a tax draft, in this case $3,033.93. It's called the 941 draft. Now, this deserves some extra commentary. Old Florida's philosophy on client tax money is very different than most of our competitors in the industry in general. It has never been part of our business plan to sit on client tax money, impound that money, and to squeeze interest income, again, off the backs of our clients' money. We are an EFTPS debit to client firm, which means that we do not hold on to that money. We facilitate a draft directly from the IRS out of our customers' bank accounts on due date. We feel that is obviously much more straightforward. It's transparent and gives our clients the ability not only to have a little bit more control over cash flow, but also make adjustments ahead of time since that money is not parked somewhere else. So the specific thing I want to bring to your attention is it's just this $3,033.93. That's always going to be itemized right here on this due date of exactly when that's going to draft. It's usually the Wednesday or the Friday immediately following the date of the check. Now, you'll notice I did not speak specifically to federal and state unemployment. Okay, most clients are familiar with those being payroll taxes that are paid by the business. Again, the industry typically likes to grab that money from customers and sit on it all quarter. Now, that is not our philosophy. Federal and state unemployment is not due until the end of the quarter, and that's exactly when we facilitate a draft of our clients' accounts. So let me repeat. This $3.56 and the $12.02 is not part of bank deposit because the money's not due yet. Okay, at the end of this presentation, I'll give you a very practical example of how clients will accrue for that expense that is going to come up at the end of the quarter. The third of the three pieces is typically straightforward, but it can be a little bit more complicated, and that's always the total PR, or payroll net. In this case, 14,232.20. Okay? So again, it's the third of the three pieces. If you added that figure, the $49 and the $3,000 tax deposit, you get exactly to 17,315.13. Now, this total PR net is always the sum of all of the lines preceding it. Okay? This is a fairly straightforward example where we don't have any adjustments, we don't have any voids, and I'll come back to that in a second. In this particular payroll, a customer had total checks netting 14,106.20. Okay? Now let's break that down a little further. In this case, there were 2 PR checks. That's what we call hard paper checks, and 11 direct deposit vouchers. So 13 individual employees got paid. The sum of those 13 net checks is 14,106.20. Now, in terms of total bank deposit, obviously that number has to be part of it, okay, because all 13 of those checks are going to draft. But because direct deposit is in use here, as it is for most of our customers, we need to break that down a little further, okay? There's another key report I'm going to flip to right now in your management reports that are emailed each time called the DD Register. And it obviously stands for Direct Deposit Register, and I'll zoom in here a little bit. This is going to show you the exact sum of all of the direct deposits. Okay, in that instance, there were 11 direct deposits. All right, those totaled 11,420.83. Okay, now if we move back here, remembering this 11,420.83, our liability showed 14 and change. So the difference between those two numbers is the sum of these paper checks. Okay? Now let me speak to direct deposit. We offer direct deposit as a free privilege of doing business with Old Florida, but it is a privilege. Not every client has got the credit worthiness to get the best terms on direct deposit. But generally speaking, most clients do, and those direct deposit funds always draft 1 business day prior to check date. Okay, so let me say that again. That's the very first thing that's going to draft a client's account. 1 day prior to a Friday, hypothetically, check date, a Thursday is when a customer is going to see that money draft. Okay? Now, let me again talk about the difference between that $11,000 and change direct deposit figure and the $14,106.20. That's the sum of all 13 checks. There's 2 paper checks floating around. Okay? Many of our smaller clients simply ask us to print a professional check that has their bank account name, or excuse me, their business name on it, and their bank account numbers at the bottom. Okay, they hand those checks out, and obviously they will clear the client's bank account whenever the checks are presented for payment. Okay, there's another camp, or many of our clients prefer to use Old Florida's fraud reconciliation service, which means those hard checks are not cut on the client's account, but rather an Old Florida corporate check with our corporate signature. Okay, in that case, we obviously need to draft our customers for that money, so that it can it can land in the corporate bank account of Old Florida to back those particular payroll checks. If a customer is on our fraud reconciliation service, we're also going to draft those monies the day prior to check date. Okay? So if this was a fraud reconciliation customer, 1 business day prior to check date, they would be drafted for the entire $14,106.20. It just so happens that the way our system allocates that, you 1 draft for all the direct deposits and 1 for all the hard paper checks, but the sum, $14,106.20, would draft. Again, if somebody was not on our fraud reconciliation product, they'd only be drafted for the direct deposits. The hard checks would clear their account when they're presented for payment. Now, there's one other little piece that's part of this total bank deposit, okay, as it flows through payroll net, and that's a miscellaneous net. You can see there's 1 miscellaneous check. And what might that be? Pardon me, what might that be? Very commonly, that could be a child support check. So, for instance, if an employee has child support of $126, we would hold back that money, in essence, okay, and compute a smaller individual payroll check than we otherwise would have. But then we need to turn around on the client's behalf and remit that money to the state of Florida, for instance. So this is another example of a check, a third party or a vendor check, or again a miscellaneous check. Those are all interchangeable terms. A third party check that's destined to go somewhere else. That's part of this payroll funding process, so it's itemized here. Okay? So this is a very standard, straightforward way of reading the liability report. I think it's fairly intuitive as to how we arrive at bank deposit. Now, as I kind of close my thoughts here, occasionally clients might see something in adjustment net or void net, and those numbers are going to add up and affect total payroll net and, by extension, bank deposit. So let me give you an example of why that can be confusing. Let's say this was a weekly payer, and the previous week the client had forgotten to pay an employee, and they called Old Florida and said, goodness, I forgot to cut a check. We provide them with the gross to net figures, and they turn around and write a check to an employee on site. It's important that that check be part of a payroll processing so that it can get posted to that person's W-2. Okay, the check has never spit out of Old Florida's system, but we make a record-keeping entry of that, and it goes right here in adjustment net. Again, if that was a $500 net check, for instance, it would inflate bank deposit because it inflates total payroll net by $500, but the client needs to recognize that they're not going to be redrafted for that $500. In essence, of a $17,315.13 bank deposit, $500 has already been pre-funded. Okay, and sometimes that can be confusing. Voids kind of work the same way, only oppositely. That is a client requesting us to cancel a check that they did not hand out. So, you know, similarly, it's going to reduce bank deposit. So a client needs to kind of think through their own internal accounting policies and realize that yes, there was really, that's in essence the same as an employee kind of writing them a refund and helping offset the funding of this payroll. If you have any questions about that, the first time you see an adjustment or a void, it's a great idea to contact us, and our client management team can walk you through how to interpret that. As we leave this presentation, I wanted to go back, and I owe you an explanation on this, on the FUTA and the SUTA, the unemployment that we facilitate payment for quarterly. What most customers, including myself, as I post our internal firm's payroll, do is they refer to another popular report called the UI Totals Report, and I'll flip over to that. This gives clients a current payroll and a month and a quarter and a year-to-date amount. So what a lot of clients will do after a payroll, they'll quickly refer to this, and they'll make entries in their QuickBooks or their GL system that at the end of the quarter, there's a bill for $2,079.03 scheduled to be paid. Same thing to Uncle Sam, $616.02. So each payroll that is run, that future dated payable is simply updated. That way the client does not lose track of the fact that that money is certainly going to have to be paid. That's really a pretty thorough overview of how you read the liability report. Again, every client is different, and we're happy to spend as much time as necessary to walk you through exactly your firm's unique circumstances.